What does a Trump presidency and a red Congress mean for the economy? Right now, the markets are having a field day. Look, the Dow Jones is 1,394 points. The S&P 500 is at 130. The crypto markets have definitely jumped. Look, we're at 2.42 trillion in the total market cap, a jump of 7.14%. But something is rotten in the state of Denmark, regardless of your political leanings. The dollar's strength, as mentioned by the DXY, has jumped to over 105. So it's jumping back to the uncertainty levels of May and June in this year. Now, caveat, it's great that the dollar is strong if you are holding a lot of dollars because everything in the planet becomes much cheaper for you. But it's bad for the people who don't have a lot of it. The entire world is holding on to more US dollars is because they are flocking to it as a safe haven currency. And you probably understand the definition of a safe haven. If people are very uncertain and not optimistic about the economy's future, they flock to the US dollar. But why are people scared? This can be explained in part by the US 10-year Treasury yield, which has risen to 4.41%. And it's been rising steadily since the end of September from the safe level at about 3.6% to where it's at now. But why? Today's Forbes article explains it all. I suggest you read it. But the short answer is inflation. The big money is once again concerned that prices are going to rise. The stock market is big. It has about $100 billion in trading volume every day. But compared to the Treasury market, it's not even 1/9. Yeah, that's right. $910 billion traded every single day. So the stocks can do what they want. That's the big money. But the ginormous money is something I'm paying more attention to. I'm paying attention to the 10-year Treasury because it's one of the most commonly traded ones, and it's also the benchmark for the average 30-year home mortgage. It's usually 2 percentage points below it. And it's not just the 10-year that's gone up in yield, it's also the 2-year Treasury. But let me show you all of the yields and how they've changed in just the past week. And this is important, so please pay attention. I'm showing you the US Treasuries yield curve, which is on ustreasuriesYieldCurve.com. And it's incredible because it shows you the annual percentage yields of all types of US Treasuries. If you look at the bottom of this graph, right here it says RRP, that's reverse repos, that's overnight. And then it goes into the longer yields. The 1 month, 2 month, 3 month, 6 month, 7-year, 10-year, all the way to 30-year. Pay attention to the date. It's November 5th, 2024. Look at this weird thing. This is how the Treasury yield curve should look in a healthy economy. And this is November 1st of 2016. This is beautiful. Ideally, the quicker the yield, like let's say overnight and 1 month, should be a much lower number than the longer yields. And this is where we and the Federal Reserve want to get back to. So why are the percentage yields higher the longer the maturity date? That just means however long you get to hold on to the bond for. Now, this is where some people get confused. I'm going to explain it, and let me know if you need me to explain it to you again on my Patreon. Just click on my link tree right on my channel, scroll on down here to where it says patreon.com, and come over to my most recent post. Just ask your question, and I promise I will get back to you. Now, here is the explanation. When the economy is healthy and there's a lot of money going around, people don't want to put it away for a long time because they think they could spend something now and get a better payoff quicker. So let's say someone wants you to put your money away for 10 years in a 10-year Treasury bond. You would be thinking, why would I do that? If I have $1,000 extra and everything's looking really good right now, I'd rather buy a stock or something nice for myself. I need some kind of incentive if I'm going to put it away for 10 years. So the issuer of the Treasury bond will say, okay, I'm going to make my $100 bond $97 or $95. I'm going to make it very cheap for you to buy it, and I'm going to pay you a higher interest rate than something that's really short term. So for the whole 10 years, you get a generous interest rate. And remember, if you bought that $1,000 or $100 bond for, let's say, $95, when it comes to maturity, when it's finished, it is worth $100, so you make that little bit of profit as well. Now, that's what happens if the economy's healthy. In 2023, when interest rates were skyrocketing and banks were collapsing, this is how the yield curve looked. Compare that to 10 seconds ago with the healthier yield curve. Just look at the healthy one again and look at this atrocity. The yield of the 10-year Treasury was lower than the 2-year and everything else before it. And here's why that happens. In 2023, the economy was a horrendous mess because of the money that was printed in the prior administration. Inflation was rampant, and the Federal Reserve took very drastic measures in raising the interest rates and causing a lot of bonds to come to maturity and not renewing them, so it shortened the money supply. So the big money became very pessimistic about the economic short term, which means they became very optimistic about the long term, like the 10-year bond. So the big money started buying all of these longer term bonds because they thought things are going to be better in the future. And look, the 10-year yield was 3.9 so low. So the 10-year bond lowered its yield because it didn't need to incentivize anyone from buying them. And it also became much more expensive to buy because so many people were flocking to that as a flight to safety. So then it was the short-term Treasury yields to try to incentivize people to buy them. And they said, hey, we are dirt cheap. And look, our yields are super high now. Fortunately, the Federal Reserve actually did their job and started fixing the problem. Look at the yield curve inversion on November 5th after the election. The 10-year and the 20-year, 30-year Treasury yields are higher than some of the younger ones, like the 2-year, the 1-year, whatnot. But the very short-term Treasuries still have much higher yields, which means they are much cheaper to buy, meaning there is still a great deal of market pessimism for the near term. But something started happening around a week before the election. Take a look. A look at the 2-year, the 3-year, the 5-year, and the 7-year yield. We liked this flatness right here. We want them well below these other longer yields. We also want this 1-year Treasury yield to definitely be lower than the 10-year because, again, we want longer terms to have a higher yield. But now look at election day. The 1-year is once again higher than the 10-year and the other earlier yields. It means that a week before the election, maybe earlier, people were starting to get more pessimistic about the short term. I hope you like that breakdown about bonds, and it was necessary to tell you this because, again, the big money seems a little pessimistic because of this bad word, inflation. Well, what is going to cause this inflation? One word again, tariffs. President-elect Trump is proposing a 10% tariff on all U.S. imports and a 60% tariff on all Chinese-made goods. He's also strongly suggested a 25% tariff on all Mexican-made goods that come into this country, including a lot of our cars that are manufactured there. His reasoning for this is to fix the deficit from the tax cuts he's going to give. What he hasn't told you is that you, the regular guy, are going to shoulder the burden of these extra costs, and it's going to be much more than just the percentage increases he suggested. The last time we implemented tariffs on such a suggested scale was in 1929-1930 under the Smoot-Hawley tariff. While it wasn't the spark of the Great Depression, many economists agree this is what made it so much more horrendous and long-lasting. Because when we put these tariffs on all of our imports for a few months, yeah, the American manufacturing sector started to improve. But guess what? All of the people that we were selling our goods to around the world put huge tariffs on our goods, so we couldn't sell what we were producing. It led to a collapse in total world trade, and the entire world bore the brunt of the Great Depression. This is a chart of all of the US's personal consumption expenditures, and you see this year we're at $20 trillion. Personal consumption expenditures, that's just everything you spend on goods and services for the year. $3.8 trillion of those goods and services are from imports. So imports make up about 19 to 20% of all of our personal consumption expenditures. So a 10% tariff on 20% of our goods just means, hey, we're just getting a price increase of 2%, right? No. Even a 10% tariff can result in a global reallocation. It may cause them to not sell those goods to you anymore and they find another market. If you're a consumer and that good is no longer there, you're going to start buying other alternatives. So is everybody else. And then we have supply shortages. And then a 10% increase in price could be 15%, could be 20%, could even be 50%. And that's just for a consumer. But imagine if you're a manufacturer and you make certain machines and you are heavily reliant on imports from, let's say, Germany or Sweden or Japan, and all of a sudden they're 10% more expensive. You may not have that budget to afford that extra 10% and you can't order as much. And then you have a supply shortage, and then you may not be able to produce the normal amount of goods that you did. And then the people who are purchasing your goods as a manufacturer, either the consumer or another producer, will have a delay in their orders. And that delay could lead to further shortages, which cost much more than that 10% tax that's passed on. and a 25% tariffs on all of our imports from Mexico, we get 16% of our imports from Mexico. Almost $500 billion a year from that country. So we're talking an extra $120 to $125 billion more to pay per year, or about $1,000 a year per American household. And if you think a supply shortage from a 10% tariff is bad, imagine a 25%. And then China, 15% of our imports come from them, totaling about $450 billion. A 60% tariff on all of those goods is $270 billion a year of added cost for the American consumer, or over $2,000 per American household. This tariff would crush a lot of the Chinese economy and the American economy along with it. But wait, Trump and Biden have already been tariffing China, haven't they? Yes, but nowhere near the scale of what Trump is suggesting. Take a look at this list of Trump's tariffs. He even tariffed some EU goods, not too much. And then washing machines and solar panels, automobile tariffs, those are proposed, but I don't think they went through. Biden administration did nothing to alleviate the Chinese tariffs. He lifted some EU tariffs, though. Also doubled the tariff on about $20 billion of Chinese goods. Tally up all the goods on the Trump administration, it's about $575 to $600 billion of Chinese goods at an average of 15 to 20%. So let's just say $100 billion of added tariffs. So let's call those pre-COVID tariffs tariff light, and that still cost America 245,000 jobs. Now, it's been whispered all over social media and also tweeted that these tariffs and, of course, Elon Musk's efforts to cut $2 trillion from the budget are going to result in a stock market crash and an overall economic downturn. Musk has even confirmed it, and Trump said, but don't worry, nobody's gonna feel it. If that were true, then the Treasury market wouldn't be doing what it's doing right now. The same article I mentioned before said, correct or not, the market views Republican control of Washington as a negative for the debt and deficits. And that, coupled with the concerns about the impact on goods prices due to tariffs, inflation could remain elevated for longer than previously expected. While overall inflation has dropped to 2.4%, core inflation has actually gone up. Not by much, but it's not dropping. You might be thinking, hey, isn't it Congress that has the power to impose tariffs and not the president? You're not wrong. Article 1, Section 8, when the Constitution was written, it said that the Congress should have the power to lay and collect taxes, duties, blah, 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 to regulate commerce with foreign nations. But a lot's happened since the Constitution was written. The Tariff Act of 1930 allows the president to impose a tariff on any country up to 50% that discriminates against U.S. products. The Trade Act of 1974, Section 122, allows the president to put an additional 15% tariff on our imports to deal with large and serious United States balance of payment deficits, which we have, to prevent an imminent and significant depreciation of the dollar in foreign exchange markets. Then there's the International Emergency Economic Powers Act, which Trump already employed to put the tariffs on China in the first place. There's more, but yes, Trump has the authority to impose a lot of these tariffs. So if the tariffs happen and we get high inflation again, can't the Federal Reserve do anything since it's their job to keep inflation down? The Fed can control inflation by manipulating the money supply, usually through interest rates and, of course, letting Treasury bonds come to maturity and not buying them. If there's inflation, the Fed raises interest rates. Already crying about interest rates being too high. Remember, when the Fed jacked up interest rates this quickly, several mid-sized banks collapsed and we were all worried about a huge bank run and a crash of the U.S. economy. The Fed managed to shrink the money supply to combat inflation, and it worked. But when it dropped this quickly, people were worried about it because we did not have such a money supply drop since the Great Depression. Even now, there is still somewhat of a shortage of US dollars. So the Fed doesn't have that much wiggle room to manage inflation caused by tariffs. Unless you want to go back to the 1980s where the interest rates were about 20%. And in the 1980s, we did have some tariffs, protectionism against Japan, but that was it. We have never in our history had to manage impossibly high interest rates and massive tariffs reducing trade. But have hope, all is not lost because we don't actually know if Donald Trump is going to go through with anything he says. Remember that Trump said he was going to have a border wall all along Mexico fully constructed and the Mexican government would pay for it. He promised to repeal Obamacare, but he left it fully intact. What about debt reduction? Here is a chart of our national debt, and you could see it was at $19.8 trillion when Trump assumed the presidency in January of 2017. Here is the national debt at $28.5 trillion in January of 2021. So he increased our national debt by $9 trillion, about 45%. He said he was going to pass an infrastructure bill for $1 trillion. That wasn't him, though. It was the Biden administration that passed the $1.2 trillion Infrastructure Act, and that was a bipartisan measure, something that Trump couldn't manage. He said he was going to reduce the trade deficit with our main partners like China and the EU, while under the Trump administration, the trade deficit went from $400 billion to $800 billion, all the way down to $3.2 trillion. That huge drop of $3.2 trillion in the trade deficit was due to COVID, but it was just a continuation of a descending trend. He said he was going to bring manufacturing jobs back to the US. That didn't happen. Now, he temporarily lowered prescription drug prices in January of 2021, a few days before he left office. But it was the Biden administration who took that measure and enacted it into law. The only promise that Donald Trump actually followed through with was giving a huge tax break to the very wealthy and the corporations. Namely, the corporations. They saw the corporate tax rate go from 35% to 21%. Now, here's something you all need to pay attention to. When corporations say, we don't want to have to pay a higher tax because we will pass that on to consumers, what happens when they had their taxes lowered by 14%? Did you guys see a drop in any of the prices of goods you were purchasing under the Trump administration? No. So we don't know if Donald Trump is going to be implementing these tariffs or potentially using them as a threat to our trade partners for some kind of leverage. But I have some more good news, and it's actually good news. $2 trillion Biden Infrastructure Act did not put any money into the economy yet. This is a years-long process. For now, they've only announced $500 billion in the next year for over 63,000 different projects to date. As long as Trump doesn't go through the crazy tariff plan and Elon Musk doesn't actually start cutting Social Security, Medicaid, and Medicare, this $501 billion getting injected into the economy is a huge economic boost. Our government has not done anything like this in 60 or 70 years. And it was these gigantic infrastructure acts that we implemented back then that made us the most prosperous country on the planet. We are talking roads, bridges, railways, clean water, sewage treatments, highways, and Trump can take all the credit for it because it's going to be happening under his administration. Why would he stop all of this money benefiting the US economy so he can make himself look like the greatest president that led to the greatest amount of prosperity ever? 21 to 23% of all the electricity we generate comes from renewables. We are the world's largest natural gas exporter, and over the past few years, we have become one of the world's largest oil exporters. We are now producing 13.2 million barrels of oil per day, which is more than Saudi Arabia or Russia ever has. And look, 20 years ago, we didn't export any oil. We were at zero, and then it bumped up a little bit in 2014, and since 2016, it has skyrocketed, especially under the Biden administration. Again, this is something President-elect Donald Trump can take credit for, and he doesn't have to do anything. Rare earth minerals are becoming even more precious than oil, and China has the largest monopoly by far. But the United States has been finding some of the largest lithium and other types of rare earth mineral deposits on the planet on our own home soil. The US is already in a position to challenge China's monopoly on these rare earths, and Donald Trump, again, doesn't have to do anything. The border issue, which everyone has been freaking out about for the past year, had a resolution that was implemented by the Senate Republicans and agreed upon with the Democrats and the Biden administration, but it was shot down by the GOP earlier this year because they didn't want to deliver a victory to the Democrats. Now they don't have to worry about that, so they can actually pass the darn thing. And if there is a good idea on the Republican aisle, which does happen, like the border bill that was presented, believe it or not, there are Republicans who actually pass good bills, and there is no excuse for them not to be implemented because we have a red House of Representatives, most likely we have a red Senate, and of course we have a red president. When it comes to what I think about this economy, I'm just going to hope for the best, but I'm going to prepare for the worst. I am concerned that he's going to launch tariffs against our trading partners, and that would really damage our economy. But like I said earlier, let's hope it's just another promise that he won't deliver on. I'm also concerned by the fact that both he and Elon Musk have confirmed that they are going to cause a severe economic downturn, even though Trump says nobody's going to feel it. As such, I am going to try to stock up on just cash. I don't know anything else that I could safely speculate on with the Trump presidency, especially with Musk as one of his advisors. I am the Geo Husar. If you found this post useful or informative, please subscribe to my YouTube. And if you want to see more of my content that's not on social media, please subscribe to my Patreon. I can't get to all the comments on my social media apps because I get about, 1 to 2,000 every single day. But if you do want to write me a comment that I will absolutely respond to, join my Patreon Tier 0 and comment on that content. Thanks for watching.